Good morning, everyone. Another quiet morning to take us into the trading day. Oh, I can't keep up with this stuff, I tell you. I'm getting too old for this shit. Morning, Kate.
Good morning, Ryan. Good morning, everybody. As they say in our neck of the woods, a tariff a day keeps the boredom away.
Don't keep the old blood pressure away, I'll tell you that. I might need some of that fentanyl shit they keep talking about. Um, Joking, of course. Woof. Oh, what another few hours we've got to deal with. Well, I'm having to start my notes earlier and earlier these days for these shows. So, but I'm going to have to check the space on my hard drive because it's eating a big chunk of it. Right, let's get into it. Lots to get through once more. Um, Everything's all about Trump, isn't it? He piped up about Japan and China, saying they cannot continue to reduce the value of their currencies. Says a weak Japan and Chinese currencies are unfair to the US. Obviously, he hasn't been looking at a long-term dollar yen chart or for to see what's been happening over there. He can't have it both ways. He wants a strong dollar and a non-weak yen. Well, work it out. Then we had Finance Minister Cato saying that he won't comment on foreign leaders' statements. And then he said, we're not using a devaluation policy to weaken the yen. So much for not commenting on what Trump said. And he said he confirmed the basic foreign stance with Besant in their prior conversations. PM Ishiba popped up as well, saying no plans on currency devaluation policy, and there's been no call from Trump on Forex. Kay, just on the Japanese thing, before we get into everything else Trump said, he's in one of his wild card moments, it seems. I mean, how can he say that Japan has been weakening their currency?
Well, yeah, where they have been intervening several times to stop it from weakening. The thing is, it would how shall I say? It would suit both, right? To have a bit of a stronger yen as well, Japan as the well, Trump at least. To rebalance a bit of the trade, probably. Um, the thing is, I mean, the comments about having weakened the yen on purpose is complete. I mean, just dismiss that. It had obviously what Kuroda did during his tenure has weakened the yen, but it was much rather trying to get out of deflation than really turn towards exports and stuff. We could argue that once the pandemic struck, there may have been some of it, but I mean even then, I mean that it's never been their aim to really weaken the yen substantially. I'm comparing that back in the 90s when there was the all that stress over the car exports, Japanese car exports to the US, where they let actually artificially drop the dollar yen until there was a deal. Does Trump remember that episode? Perhaps he won't say it, but no, it would be in both interest for the yen to strengthen a bit. Not so much to bring down inflation in Japan, but if you still import energy, etc., it's always interesting to get a bit of a stronger yen, and we know that the local economy at least is still well, bobbing about without being exceptional, doing better. But if your currency goes a bit stronger, it can also mean that the foreign investors are more interested in coming towards you. So I mean, there's all kinds of valid reasons for the yen to strengthen a bit, and both sides of the Pacific have interest in doing so. Now, will it happen is obviously a different thing. There's It's going to be money flows if Japanese companies invest in the States. It's going to have an opposite effect of needing to buy dollars. Now, it's good that we talk about this right now as well, because we are in the last month of the Japanese fiscal year. And Japanese companies in yen terms having produced record benefits for this fiscal year, we might actually see flow-wise a bit of repatriation in yen to repatriate profit. So just going to say this on the tip of my toes, but things may still hint at that side as well for the yen. So that's part of the potential tailwinds that we see for the yen as well this month.
Yeah, absolutely. And funny enough, I discussed exactly that on the trade-off show last
Oh, right.
yesterday
Okay.
with Michael. I had three big things to watch out for this month: fiscal year end being one of them, and potential repat flows. Obviously, the fixes are going to be important as well, particularly the Gatobi days, as you well know. What the big whales are going to be doing, because they're going to be setting out their investment strategies, and
Yeah.
as we've been discussing, will they be more domestically led? And so there's big things to watch. Obviously, the wages that we all know about. There's big things to watch coming up from Japan, and this is the month where it's going to happen. I've just chucked the link to the show in yesterday for anyone else who wants to catch that. But otherwise, yeah, it's going to be a big couple of months, because it's March and year end, and then we get all the wages stuff. So March and
Absolutely.
April is going to be big.
And absolutely, and if and assuming that we are not dropping in between then and now in the JGB yields, it might also be the start of something new for the Japanese whales, and that may be an additional tailwind for the Japanese yen. I mean, it's maybe spread out over a couple of months, but it's certain for sure going to be it would have already been an interesting month, and 2 months with Japanese yields where they are, and end of fiscal year. But now this discussion surrounding the yen could add a bit of spice to it all.
Yeah, never a boring day in Japan, eh?
Yeah.
Right. Right, so let's move away from Japan a little bit. We got some data out from Australia. Retail sales for January coming in as expected, 0.3%, following a minus 0.1% in December. It seems like a lot of people were doing a bit of shopping in the early part of the year rather than over the usual holiday periods. We also had the RBA minutes out. We know pretty much where they're at, but just to pick out the pertinent points, they said there's no commitment to further cuts, and they are cautious on additional easing. They say the inflation slowdown and wage growth were key factors in the rate cut case, but they say labour market strength was the main argument for holding rates. So we know where they're at, we know what they're looking at. So those are the data points you need to keep an eye on. Over in Europe, the magic money tree is being plucked again. EU's von der Leyen is going to propose a new instrument, yay, a new acronym coming, that will provide 150 billion euros of loans to member states for defence investment. She's also going to say, or she also said that the EU will propose to activate the national escape clause of the Stability and Growth Pact to rearm Europe, which could mobilise close to 800 billion. So this is Europe magicking money out of thin air, and likely loaning it to be paid back indefinitely, all of which member states will be happy with, as long as they don't have to account for it under their normal fiscal rules. It's amazing, Kay, that they can find all this money just out of thin air, and everyone's going to be happy with it.
Happy, I don't know. I don't know. That remains to be seen. But yes, when they have the proverbial knife on the neck, they all of a sudden can find everything, and as well in Europe as the UK, as everywhere where it's needed. It does somewhere justify questions, why not before? But I think before they had more priorities of trying to prop up the economies in different ways, and but now I think Trump just put them in a place where they can't do anything else, right?
Yeah, but yeah, it just amazes me. I mean, we have the question: how does the euro stay up on such things?
Mm.
They whittled all this pandemic money out of thin air. They whittled all the money for this defence stuff out of thin air. Um, will the ECB have to pick up some of the tab in terms of monetary policy and
And normally they don't.
QE, QE, and
Well, normally they don't intervene in fiscal policies, but I think we're heading towards that way. I reckon because, as I was saying already many times in the chat rooms as well, any central bank here, apart from the Bank of Japan, would hate to have to hike interest rates or so. But I think the potential, if there is a bit of pressure, if there is more borrowing needs, is that they buy bonds again. They may not call it QE in this case. They may come up with yet another an acronym, as you say, or acronym. And call it some exceptional liquidity providing to the pan-European system also. But yeah, they may be called to help out. It's for sure not to be excluded.
yeah,
But they won't be part of the decision-making process. They will be asked,
no.
and then yeah,
I mean, my thought is that it would at least give them an excuse to keep cutting rates because that would obviously help out with any debt that
mm,
comes from this, and that might
yeah.
be the way they can politically swing it. Oh, we're not helping you out. We're just cutting rates because that's what the economy needs, sort of thing. Nudge, nudge,
Mm.
wink, wink. Um, either way, it still falls into my thinking that they're going to still have to cut lower than they want or expect. Well, I don't know what the euro does with that. Anyone else would think the euro be trading below parity at some point, but here we are, still holding up pretty
Yeah.
well.
That thing, and now you talk about the euro and below parity euro dollar. I think the environment we are in now is an environment of less confidence in things US rather than the rest of the currencies being very strong.
Yeah,
There is a part of EU, UK. Yesterday, especially, we saw that when the EU and the UK, euro and sterling were doing really well against everything else. That's as we've been discussing, probably the Europe and UK getting their act together on defense finally and forming that block. Now I think if you look at the rest of the currencies, you look at dollar yen, dollar Swiss is back down. Even Aussie and the Kiwi are showing signs of a bit of revival. It's more a case of the US dollar side of things.
yeah, absolutely. And
Yeah,
I'm not one for saying that a currency should be at a certain level because of circumstances. Market's going to trade where markets are going to trade.
yeah.
But I'm certain. I'm same camp as you. I'm certainly not a fundamental buyer of the euro anyway.
No.
And that's the main thing. James says that Draghi was also pushing for big fiscal spending. Yeah, he was doing all that when he was a central bank governor as well. But no, I don't think defence was what he had in mind. 800 yards was his number two. Maybe it's a coincidence, or maybe they've just stolen his paper to use. We shall see. Right, let's get on because there's still tons more to get through. Bit of data out yesterday in the US, and once again, really the data is only having short impacts. Certainly, in some cases, short impacts on market moves. Canada PMI manufacturing that went into contraction, so another reason not to be jumping into CAD longs just yet. Then a bit of a surprise for the S&P final PMI, jumping to 52.7 from the flash 51.6. So a good improvement there, but perhaps offering a false sense of security when we got the ISM number, which came in lower than expected at 50.3, though still holding the expansionary line. In the components, though, we had a bit of a stinker for employment, which is obviously closely watched with the NFP coming up this week, 47.6, another contraction number. And I'm just going to look, because I don't think we've had many expansion numbers here. So perhaps it's not, yeah, there we go. It's not too much of a shock. That one looks a bit of a one-off. And as you can see, we've had negative numbers all the way through, yet NFPs have still held up. So the services number is going to be the more important one to watch. But just you can see there, 50.3, a bit of a one-off compared to what we've had pretty much for the last year or so. Did get a big jump in prices, though, 62.4 versus 56.2 expected and 54.9 prior. So again, a bit more into the inflation pot for the Fed to deal with, perhaps. Did you take anything from that data, mate?
Yeah, I found it a pretty weak one. The wrong component is high prices, and I think it has to do because Ali is saying like if I'm not buying euro and you're not buying euro, who is? And then I think the risk question is perhaps completely linked to that as well. If we see those kind of numbers, and yes, you showed the employment index being sub 50, being having been there for quite a while. But if we see those kind of numbers, this is the wrong numbers that for the confidence in the US. If you look at those numbers and just take those numbers standalone, and we all know that services is going to be much more important than manufacturing size-wise for an economy. But if you just look at this particular set of numbers, this is not great for stuff like GDP, because if you have a weaker employment index, if you have manufacturing new orders, if you have the new orders, sorry, skip manufacturing. If you have new orders in contraction, but you have higher prices, it's going to weigh on your GDP, and it has. There can't be anything else. I mean, it can't be read to in any other way. So I think what is happening now, and when people see those kind of numbers, is eroding the confidence in the US exceptionalism that we saw for a few years, and I think that is what is driving markets right now, and the the risk that tariffs present on the US GDP, and perhaps let's add straight away in the shorter run, because who says higher tariffs means higher prices? So if you have to pay higher prices, are you going to pass them through to the end user? If you pass them through to the end user risks snapping at some stage. If you don't, then you're going to start weighing on your producers and your companies. And in that sense, I think the market now thinks that tariffs, or what is happening now since Trump's inauguration, and as I said, we need to take those numbers after the inauguration to see the confidence that the market or the consumer has in what is happening right now. If you look at it this way, then it explains a lot of the moves that we have seen over the past few days.
Yeah, and Derej asked, what is Mr. Trump intending to achieve then? He's trying to achieve a level playing field in his eyes. Okay, and you got to remember, in a lot of aspects, he's right. The US gets tariffed on a lot of stuff. Europe is one of the biggest tariffers going because they want, to put it mildly, they want to close shop. In effect, they want to have their cake and eat it. They don't want to put all their Eurozone countries and European countries at risk from, China dumping and whatever. So they are one of the biggest tariffers out there. Make no mistake. And Trump wants a more level playing field for his firms. Is it protectionist on both sides? Yeah, of course it is. What does he want to achieve? He just wants to make America great again. But in that part, he wants companies producing in the US. He wants them selling in the US, and he wants his citizens to buy US and strengthen their own economy, which you can't fault him for. But that's what everyone wants. So it does become a zero-sum game, if you like, with tariffs. You put 25 on me, I'll put 25 on you. And all it does, as Kay's just said, is it just ends up potentially hurting your economy on both sides. Or it works and everyone gets on happy and it's jelly and ice cream and everyone's making money, which is the bottom line, really. But whether it happens or not, and whether it happens within the 4 years he's in the hot seat, that's another question, and that's what we're going to be trading. Right, onto the ISM. Oh, no, I've done the ISM, haven't I? Onto the Fed. Fed's Mr. Liam says we would be concerned by signs of inflation expectations unanchoring. Fed policy is modestly restrictive and favours a patient approach. It says the signs of consumer pullback would be concerning. Recent data suggests downside risks to growth. So he's getting a little bit more bearish on the economy. Fed funds futures are now pricing in over 3 cuts for the rest of the year. We're pricing 76 basis points, only a pip above 3 cuts, but that's up from the 68% it was at yesterday. So the market getting a bit more dovish over the Fed. Oil, we haven't talked about oil for a while, but apparently, according to one OPEC delegate, OPEC Plus is going to go ahead with the planned April output hike. Just what oil markets need when they're on their knees. A bit more supply coming in. That's seen WTI down in that zone, 66, 67 zone. And I'll look at that in a moment. A big old support level down there. Right, let's get into all the other crap. So we started off yesterday coming into the tariff deadline. Mexican President Sheinbaum said we have a plan A, B, C, and D, and we will talk about our decisions tomorrow. Whatever the decisions are from the US, we will make our own decisions. She didn't rule out a phone call with Trump. And said that they had been coordinating with the US government on fentanyl and trade, and that those conversations had been very good. Even after that, Commerce Secretary Lutnick said Canada and Mexico have done a good job on the border, but they both must tackle fentanyl. And then it all began. Trump, he announced tariffs on external agricultural products coming into play from the 2nd of April. Also repeated that reciprocal tariffs will begin 2nd of April. Then he dropped the bomb that Mexico and Canada tariffs will begin on Tuesday, and that there's no room left for Mexico and Canada to do a deal on tariffs. He went on to say he will talk with his Mexican counterpart and would consider an FTA with Argentina. He also plans to double the China tariffs to 20% from 10%, but further China tariffs will depend on their retaliation. Since then, China has, it's pretty much been constant, the list of stuff they're going to start hitting back on, gene sequencing, chips and all other bits and pieces they're coming back with in retaliation. But Xinhua News also reported that China has released a white paper on controlling fentanyl-related substances. So that might be a little bit of a concession there. But obviously, that's one of Trump's big bugbears to do with Canada and Mexico and also China. So maybe they're looking to do something there. Canada was out. Finance Minister Joly saying that Canada is ready if Trump imposes tariffs. And they're ready to put tariffs on 155 Canadian dollars worth, billion dollars worth of US goods. Then Trudeau popped up saying that he will impose retaliatory tariffs on US imports. There'll be 25% tariffs on 30 billion worth of US goods starting Tuesday, an additional 125 billion worth of tariffs in 21 days if US tariffs persist. Those tariffs will remain until US trade actions are withdrawn. He's also exploring non-tariff measures with provinces and territories. So it's a no deal, as it seems to be at the moment, which is still a bit of a surprise to me from the Mexican side, because they had been busting their nuts to get a deal done. But as I said yesterday, the risk of a no deal was the bigger price risk, particularly for the Mex, more so than the loonie, and that's borne out in the price action we've seen today. Before we get into prices, we all got this other stuff, the Ukraine stuff going on. Starmer saying that the Ukraine minerals deal is not enough of a security guarantee on its own. Zelensky again signalled he would meet with Trump if invited back. Then he came out with a comment in the press saying the end of the war with Russia is very, very far away. That got Trump hot under the collar. He dropped a truth bomb saying this is the worst statement that could have been made by Zelensky, and America will not put up with it for much longer. But then a little bit of concession, perhaps. He says he doesn't think the Ukraine minerals deal is dead, and he's going to give an update on that deal today or tonight, Tuesday night. But what's happened in the meantime is that he's paused all military aid to Ukraine. A White House official said the US is pausing and reviewing the Ukraine aid to ensure that it is contributing to a solution. They even stopped stuff in transit, stuff on planes, stuff at airports, stuff at ports, all got stopped. Last bit of politics. German CDU leader Merz says there's no deal yet with the Social Democrats on defence spending. All the horse playing is still going on. Says we haven't discussed a date for convening Parliament, but we should seek a defence deal before Thursday's EU summit. And just a reminder, heads up, to do with Canada, Trudeau may be piping up still, but he's going to be replaced on Sunday. There's the leadership election for the Liberal Party in Canada. That's happening Sunday. Two runners, I think, in the frame, Carney and Deputy PM Freeland. The return of Carney, Kay, is going to be fun. But let's not waste time on him. I want to take you back to the tariff stuff and all that. It seemed a bit of a rug pull in the end, and a lot of maybe he's been reading too many headlines that his bark is worse than his bite.
Yeah, but that's one thing. But where I didn't really get it was that like an hour before from the White House, completely opposite vibe came out, and they were saying like, would it be on tariffs or Ukraine? They were saying something completely different. I'm actually wondering whether he's actually talking too much to his staff as well, and just having those couple of guys around him that are shouting really loud into his ears. Yeah. I don't know what to really think about it right here and now, because we also know that he can do 180 whenever he likes. Imagine that Mexico Scheinbaum, because she was talking about having a call today and having a plan ready to submit today, and then yesterday he slaps the tariffs on. Yeah, it could be. We've said that it would be one of the possibilities that he even goes ahead and then does 180. So it's all still very possible. Now, there's one thing where I would need to perhaps adjust a little bit to what I said, or what the understanding is surrounding all those tariffs. We are talking about let's say manufacturing, physical imports and exports, and when people talk about how I'm sorry, making a level playing field, I think sometimes we forget if you look at the goods trade balance, it's extremely negative. The States, okay, but I'm kind of wondering what the other trade balance looks like. The services like banking, insurance, investments, and stuff like that. I think that the US has got its fair and probably a lot more than its fair share of the pie on that side. So we're always focusing on one side of the of this whole tariff thing, and the market is obviously focusing on it as well. But if you look at how rich the American financial services world has become, thanks to US's involvement everywhere in the world. Maybe we should have a little thought about that as well, and not only focus on physical trade balances. Now, for the rest, again, I can only say that the situation is fluid. Yeah, the mix you're on the mix there. It shows that move. But again, I think the situation is still fluid. Anything can change there. And we may trade back down to 20 and a half or so.
Yeah, absolutely. I'm not going to lie. I think I'm still short, and I've been adding. 21 is really my
Yeah,
level.
21.
If we're moving above 21, then I'm going to have serious thoughts about what's
Yeah.
going on. It has been a bit of surprise. I think I'm holding out for a bit of hopium today that we get a different headline or some positivity. But it has been strange because I've been saying it for the last couple of weeks. They were the ones who seem to have been working harder than Canada to get a deal. I'm surprised they haven't got any sort of concession.
Mm.
But it was still always a risk, and that's why we're seeing this follow through this morning in dollar mex, where we're not seeing that in dollar CAD. The market was pretty much ready for a no deal outcome. It's why we've had a confirmation pop, and now we're going the other way. And dollar China, that's altogether just reversed. We didn't even get a pop on the confirmation of that, and it's like we've been saying that was coming, come what may. They were getting hit with tariffs. That's a bigger fish to fry. But here we have dollar China. Do you think that China might be smoothing this one a bit?
No, I think it's the perhaps the market. There's a couple of things going on there. We have these two sessions have started today. We have that comment about the currency from the US side, but it's still early days in there. I was I was hoping for a pop above 731 to get short again against that 737, but just stopped shy of it, unfortunately. I don't know. They can come out of those two sessions and then all of a sudden start to ramp up those fixings, the PBOC, and then we are going to go back up into 730s. But let's also not forget that they are playing a different game. If they want the market or investors to come back into China, you can't let your currency devalue by 10% because you need stable currencies, and a stable FX to attract investors as well. When did the investors invest so much in Mexico, even being an emerging market currency? Yes, you had the friendshoring, yes, you had the nearshoring, but you had a currency that was already um, doing better, and you want to be in a country where the currency is doing okay. It reminds me and shows my age of the 80s and well, late 80s, 90s and stuff in Germany. You had zero interest rates in Germany, yet your currency was doing well. You didn't have any inflation. Everybody wanted to be in Germany because you had stability. If if China starts to think that devaluating is not going to help them, they can keep the dollar yuan here forever. Even if they are looking to beef up their exports again, it may be, and I'm not saying they will, but it may be that they just keep everything stable and then reopen markets and then with what is it, like $1.5 trillion or so plan to revive their economy,
Yeah.
that they may start to attract investors again. And so this it's still open. Have put this 5 years ago, or 7 years ago, because I mean pre-pandemic, I would have said dollar China goes to 8.5, and because they are going to devalue their to prop up their exports. But right now, it's really an open question to me.
Yeah. Now, I want to give us both a bit of a pump now, because one of the reasons we do this flow show isn't just to talk every day whether gold's moved 10, 50, 20 pips or what's moved 10, 20 pips. Okay. The half the point of this show is to give you boys and girls an understanding of how to fundamentally or read the fundamentals and define what the market is thinking, because that can help you with your trading. All this tariff stuff since the beginning of February, okay, when we had all this stuff going on here, okay, end of Jan, beginning of February, all this tariff stuff. This was the first tariff news. And what did we say? Once it had all been traded through, market's going to forget about it until a week before the tariff deadline. And we came all the way down and we had a break and blah, 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 blah. And then what happened? A week before these deadlines, we get in this. And the market's saying, right, who's in under the cosh? Okay. And then through this, you can see the market is trading a no deal, because it was doing this move more than all the others. Again, going back to the MEX, what did the MEX do in that period? Nothing, absolutely nothing, because the market was thinking that they're likely to get a deal, or there was a greater chance of getting a deal. So you've had two currencies in exactly the same tariff threat boat. One's moving on that threat, the other one's not. That tells you what the market is thinking. Okay. So then when you get to the deadline, you know what the risk is. Okay. There was very little risk for huge upside here, because the market was already leaning that way. There was greater risk here. Now, doesn't mean you're going to make a trade on it. Doesn't mean you're going to be the right way on it. I'm not. I'm well offside of my trade on this one. So I had the market right. I've got the trade looking crap at the moment. To a certain extent, that doesn't matter. If you can get the pulse of the market, then you know how to react to it. Okay, that's where you make the big pips. It's not, oh, has gold moved 10 pips today and what's the next level? Ali, it's not your cable 30 pip stop or dollar yen 30 pip stop or whatever. And I don't mean that in a negative way. Yeah, you can job around and whatever. But when you want to try and go for the big pips, the big trend moves, getting the fundamentals right, this is what you've got to look for. And K-Man and myself, we've been all over this all the way through on how the market has been reacting and moving and what it's going to likely do next. And if you get that picture, okay, then you can feed it into everything else you trade. Okay, so what's going to happen now? From here, it's going to be a big old mess. There's going to be tariffs, retaliation, blah, 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 blah. And it just becomes messy. And then in 3 weeks' time, we're going to do it all over again with these April tariffs. The cleanest outcome for trading would have been everyone gets a deal, prices trade all the threat out, and then we have a clear bit of period, a couple of weeks, and then we do it all again in April, and we trade it whatever which way we want to trade it. So there's a big thumbs up to you, mate, for how you've most certainly been calling it all the way through this. But I think it's important that the people who come here and listen to us, Kay, understand this is why we're doing the show. This is why it's not just a price analysis show showing charts all the time.
Yeah, absolutely, and I would completely join you and saying actually the last part, the bits the people want to see at the movies, the trailers, it's the charts, and but the most important bit of what we do is probably the middle part of the show, and talk about what's really going on, and where we think that the next pinch points may come, or the next positives may come, whether it be bad or positive.
Yeah, I think that's spot on, the pinch points. Knowing when we're going to get something happening, a move happening, be it a deadline or a meeting or a piece of data or whatever. So, yeah, well said, mate. Well said. Right, I'm keeping an eye on euro dollar, and then I'll bounce it over to you, mate. We've had yet another test here at this 105.30. Is an absolute brick wall at the moment, as you can see all the way along there. Now, what I'm particularly looking for here, and I've been mentioning it in all these moves up here, is that when we failed here, we haven't held the 105, not for any real length of time. Okay, we've had little tepid moments. This is a 15-minute chart. We've had little moments, fleeting moments. Watch out here. We've had one test. It's held. Okay, if this holds for any length of time today, I think there's probably a 95% certainty that we then go on and break this 105.30 area. Okay, this level up here, 30s, is massive. This 105 is just as important in terms of what is going to happen. If we're back under here, well, then we do it all again, and we might have a pullback to these levels again, the 50, 60, 70 zone, and we do the same sort of stuff we've been doing before. So keep an eye on this 105. I'm actually half tempted. I missed it on that test. I'm half tempted to have a little go, just maybe a 15 pipper stop on that one, if it holds, just to see if it does give it the springboard to go. You were saying it in the room as well. 106 is the obvious target up here. This being the euro, I'm still cautious about these two lines in here, mate, as to whether we have what it can do, which is have a little break and then it runs into trouble and bangs its head once again. But I think it should have the legs for a 106 test. That's your thought, mate?
I think it may be because it's been showing up so often. I think if it breaks, we're at 106 in a flash. Well, in a flash. We may still have to wait until New York walks in to get the real test. But it does seem to me like we are going to get it. It's just holding up right now. Yesterday we had that move up from 104. We stalled. And then, but we are just like 15, 20 pips away. It's looks a bit dangerous to me, and I guess warranted or not, but I guess there's going to be enough stops and people getting like triggers if it goes through there to really do those 70 pips straight away. Now, is it going to hold? Is a different story because we are still weighing up the options between whether this is a more pronounced, whether we've reached this inflection point on the dollar and it's going to be a more pronounced weakness in the dollar, or whether it's just a temporary thing and sooner or later the market wakes up and says like, where the heck is Europe going to get those 800 billion euros from? Wow, the start will be 150, but it's still already a hefty amount. And have a fake break. It's all possible. The jury is out on that, but I do think it looks like we are going to get this run to 106.
Yeah. Marion asks when the long-lasting move to the upside will start in euro sterling and euro dollar, and for what signs to look for. Well, that pretty much goes into what I was just saying earlier about talking about this, guiding you through the tariff stuff. You've got to know what's driving the euro higher. Is the euro going higher? Is euro dollar going higher because everything's rose in Europe? Absolutely not. It's going higher because, as Kay said, there's less losing or lessening confidence in the US dollar. Okay, that's going to be the reason why this breaks higher, not because Europe is great. Euro sterling's a different kettle of fish, because if euro dollar's breaking, it's likely a dollar move, so cable's probably going to go with it. So euro sterling might not do anything at all. It might see a bit of a gain if there's a ton of stops that forces euro dollar to go faster than cable. But I would think they will both be going at similar speeds. I'm with you, Ali. I saw your comment earlier. I wasn't so keen on a break trade a few days ago last week, but I might give that a little go as well. Maybe 35, 105, 35, 40. If it looks like breaking, or if it tests breaks 105.30, doesn't go too far, and then tests and holds it, I might give that a little go for a run to that 106. So lots of ways to play it. And Mariam, will it be a big move? We don't know. 106 is the next level in the way. Worry about that level before you worry about anything else. Right, okay, I'm going to ping it over to you, mate.
Mm.
Oh,
Yep. And just pop. Where am I? Here.
There we go.
So the yen, we are back. It's doing a bit of a, as I said in the room, a bit of a Gloria Gator. And now you're back from outer space because space was here. And I showed this weekly cloud, yeah, in the dollar yen. Just going to reiterate that the Japanese are watching those clouds quite closely, but they rarely watch anything under the daily, max the 4 hours. So don't go and put clouds on dollar yen in the 15 minutes, okay? Please never ever ask me that. Um, so that got rejected on a little stop run. We never made it up to 152, and now we are back. And indeed, Ali, we are on the 100 weekly, right here, 148.67. And then if we go to a bit a lower time frame, we see how many times we have tried this one already. Um, it has the looks it may go this time, and also because of what I said at the start of the show, both Japan and the US and Trump, we know what he wants to do with certain dollar pairs. Both have interest for this to go, and it may just go this time. It may just go. And where can we go to? I think the next objective, if we get through this 148.60, maybe around 147.20. But I'm rather looking at the zone here, anywhere between 147 down to 145 is probably going to be some kind of an objective if the dollar yen breaks here, but it looks prone for breaking now. Okay, and also it's helped by risk, as we have already been saying. Yes, the US yields coming off is helping the dollar yen lower, but we've also seen those bounces, those big moves lower. Yen has been trading with risk, and what is happening? We are back to the support on the S&P, and I'd argue that if the S&P breaks, you're probably going to see the break in the yen pairs as well. This is how I am looking at this, and it looks a bit. It looks like we are heading for this because um, I don't see too many reasons after all this tariffs ping pong for equity markets to take it as positives. As I said, there is a risk that it weighs on growth, and if you look at the weight on growth, it could actually drag the yields down. It could drag the equity markets down, and that's going to be a double tailwind for all things yen in my opinion. So I'm actually pretty ready for this to break at one stage. Talking about the yen pairs, let's have a quick look at what's happening in the cable. We have tried to get above the prior highs here. It's shyly holding 127 now. But again, if we start to look at risk, how far is it going to go? People in the room know that I'm long. I am still a bit long cable, but I've now tightened the leash. I've let some more go. I've also reduced my short euro sterling because of the element of risk. Um, I'm still not positive for the dollar, but the risk element is starting um, to make me be a bit more cautious on everything that I've got now on. So I've got reduced positions right now. Um, But anyway, in any case, I think for as long as we're above like 126.80, this looks relatively positive still. I don't see too much reason to flip around the dollar. But yeah, I mean it all depends whether we're going to have that break, as Ryan already said, also about 105.30, 35. If we get a break, cable is probably going to go with it in sympathy, and then we could go and reach 128. That's where I think we need to get up to be in really reflection time. What are we going to do next? And it may coincide with that 106 in the euro dollar. Kiwi and Aussie. So Kiwi, as I said in the room as well, we finally showing a bit of signs of trying to put a rebound in place, but we need to get over this 56.30, 56.45. David, um, it's done this in the past and it came back down. And let's also not forget that both are a bit risk plays. Also, looking at what's happening with those Chinese tariffs, so both may need this break here above 56 30, 45 in the case of the Kiwi to get going. But has to be noted that we had a lot of tries under this prior low here, 56. We had a lot of them to try go to get down, but it's starting to bounce. Yeah, I think it's not a bad idea. I've got the other one, its little cousin. Well, its bigger cousin. I've got a bit of the Aussie in my case. And I'm going to look at this zone here, anywhere 6190, 60, 6180 or so. And it's also showing signs of rebounds, but similar, exactly the similar as in the Kiwi. We need to get back above 30, 35, ideally above 62.5 in the Aussie to start going, okay? So for as long as we are below those two levels, Kiwi or Aussie, I think we still need to be very cautious, okay? But whether we have one or the other, Aussie Kiwi doesn't move that much, okay? It's a little lower, so the Kiwi may look a little better right now. Because likely the Aussie has a bit of a deeper relationship with China than New Zealand. But it is both are sort of similar kind of trades, right? I'd be worried if long Kiwi is actually, I'd say it's relatively simple. Get back below this 55.80 shouldn't be long anymore, and that's a relatively cheap stop, I would say, for the short term. In the medium term, if you look at the medium term, as I say, we are going to have to break back above serious levels to really change the whole thing. People are looking at all those bounces in the form of perhaps bearish consolidations for going even lower. But okay, let's take this step by step. For the time being, the market is a bit doubtful about the confidence in the dollar. Um, just back quickly on this sterling, because it does seem, and euro sterling is trying to form a base here. I think it has to do with risk, but if you obviously you can be long euro sterling here if you think that it's all going to end up pear-shaped in the risk scenario, or even for the UK if ever they start to talk about taxes. But it's still very much in the downtrend here, and I wouldn't change my view unless it starts to go back above 82, 85 or so on the euro sterling. For the time being, it is still a very, very slow mover, and it has had those little spikes and coming back afterwards. But it does, I must say, seems today that we are trading a bit more risk, in which case sterling is a bit more related to risk than what the euro may be, okay? And usually when it's full on risk off, euro crosses tend to spike higher as well, and that we have seen in those two crosses, which are the Euro Aussie, which when even broke above this 169 level. It is still hanging around there. Let me quickly look. Yeah, it's still hanging around 169. So still a bit of a dangerous one. That also, if risk continues to do badly, we may see this spike higher. I'm very shyly trying to see if this level holds or caps and we can come down again. But therefore, I'm going to have risk needing to help me. And if you look at the Eurocat, did exactly the same thing. We went up to the prior highs again. We're not yet breaking out of the wedge, but it's already sufficient that we tackled. But now we are starting to come down. There's something that is underpinning the Canadian dollar right now, which I'm not 100% sure what it is really. But we are hanging back around those prior tops here. But keep an eye on what's happening at 152 and a quarter in the Eurocat, if ever we get back up there, because that could be very interesting what's happening there. And with that, Ryan, that's enough for today. Back over to you, mate.
Yeah, thanks, mate. Good show this today. Long one, but hopefully a good one and informative for you guys and girls, the viewers. That's it for today. Thank you all for coming. Good stuff as always, and we shall see you all tomorrow. Maybe a bit quieter or not. Who knows? Good luck.